Well, boom and bust is always a risk for the New Zealand economy. We are a small economy and we tend to be quite volatile in our growth. But at the moment, we think we're heading for a soft landing, and there are good reasons for that. There are downside risks. The dairy prices are well off their peaks, the housing market's flat, but there are good support factors as well. Strong migration is one of them. It's pretty hard to imagine the economy going into a hole when we've got record numbers of people landing on our shores. Interest rates are still very low, and indeed the Reserve Bank's indicated that they're not going to be going up anymore anytime soon. The New Zealand dollar is still high, but it is off its peaks. And of course, if things do actually turn pear-shaped, then there will be a response. Interest rates will drop, the New Zealand dollar will drop. There are these sort of automatic stabilisers in fiscal policy as well. So you can't just subtract the hole in dairy prices from the rest of the economy, though admittedly it is a pretty large hole. We're sort of talking about $5 billion. The New Zealand economy clearly is slowing, perhaps towards a growth rate of around 3 rather than 4, but we were never going to sustain 4% for long, and we don't buy into the boom and bust scenario. We think the Reserve Bank has actually been quite successful in slowing the economy before it started to overheat, and that's a good thing for long-term growth in this economy. But the New Zealand economy is always going to have a bumpy growth profile. We're a small economy with a big agricultural exposure, which means the weather can throw it around as much as anything else. But the long-term growth rate is determined by productivity and labour supply and the amount of capital in our economy. All those things are pointing up at the moment, and so that means the New Zealand economy can probably grow at 3% sustainably, whereas a year or two ago we would have said the speed limit was about 2%. So if you look through the noise of the economic cycle, I think New Zealand is really well poised to have average growth that will really increase New Zealanders' well-being over the years ahead. It's pretty clear the Reserve Bank's on hold until at least the end of this year. We think they'll hike in the first half of next year. There are good reasons for a pause. Falling dairy prices is number one. The housing market now seems to have flattened out, and there's a general lack of inflation pressure across the economy. Indeed, inflation's been surprisingly low compared to what indicators would normally suggest. So if CPI inflation is going to be under 1.5% for the rest of the year, that's our forecast, it's pretty hard to hike rates into that.